Morning traders. Well, let's start things off like we usually do with the DXY Dixie US dollar index. We've seen it's rolling over a bit here, looking like it wants to come back to that 50-day simple moving average, but the market is a bit hesitant to make any big pushes because we've obviously got that major US CPI printout tomorrow, 1:30 British Standard Time. The RSI is below the 50 levels, so it's a sort of downward bias, downtrend bias at the moment. But until we break that 50-day simple moving average and that recent low of 1047, I'm not going to be looking on the short side. I want to first see that happen. Moving on to the US 500, S&P 500. We broke this downtrend line that formed from the highs of end of March. Broke the downtrend line, been charging high since mid-July. The 21-day exponential moving average is above the 50-day simple, and price seems to be in a nice little mini uptrend here. However, there's a couple things to note for the bulls. I've drawn on the highs here of the RSI, this trend line. You can see there that it's making higher highs in the RSI, but making lower highs there. So that's negative divergence, not good. We've also got some significant levels of resistance in the form of the 200-day simple moving average, this horizontal resistance line of 4.2K. We're around the 50 fib level, and we got 61.8 above there. So I think, again, market hesitant, not wanting to move until we see that US CPI printout on Wednesday. The levels to watch, in my opinion, would be on the downside 4K and on the upside 4.2 if we push higher above there, and then we bring that 200-day simple moving average into play. Euro US dollar, I've drawn in this little mini horizontal line here at around 1027, 1025. Price needs to break above that before we can see a target of the 50-day simple moving average. The RSI is moving a bit higher. It's just above that 50 level there, but we need to see what happens if it does push high against that 62.5. The next level above the 1027 is the 1035 area here, which is sort of in line with the 50-day simple moving average. On the downside, we've got a little bit of support here at 1015. Let's move on to pound dollar. I drew in this little mini triangle here. Pattern's broken to the downside, but it's trying to get back up. Bit of resistance in the form of the 50-day simple at around 121.5, 122 above there. Bit of support there too at 121.5. RSI, again, it's just above 50, looking to move into that 60 horizontal resistance line. On the downside, 120 would be the level I'd be watching as support. There's that recent 5th of August low, and it's a round number psychologically. EURGBP had a nice sell-off when I was in Nice, made my trip a little bit more cheaper when it converting pounds to euros. However, the bottom was in as I left Nice and I flew back on the aeroplane back to London. 0.835 higher now into that 0.845 200-day simple moving average. RSI still got quite a bit of room to run before we get back up to this key resistance level here. I'd say 0.85 would be the next major level, the round number. Then above there, you've got the 50-day simple. And then on the downside, 0.84 support here would be key. Dollar yen, back right into that 50-day simple moving average resistance and the 21-day exponential. It's around this 135 area, round number psychologically. The RSI's rolled over again, so do we take a short the rallies bias here? I guess it depends what US 10-year yields does and that US CPI print on Wednesday. Also, we've got to keep an eye on that developing situation in China and Taiwan, given Japan's proximity to that area. Right, let's move on to commodities. Gold, again, it's sort of on Friday, got knocked back off that non-farm payrolls. We've driven higher again now. We pushed above that 50-day simple moving average. We're targeting that 1.8K level announced. We got this RSI at 62.8. It's a major resistance level. So we'll have to see if price can push higher above this 1.8 resistance. On the downside, 1775. We got the 21-day exponential moving average too, and below there, the 1750 bottom of range support. I can't see any notable divergence or anything like that. I would maybe just draw on a fib here. Let's see, from this recent high down to the recent low. So we're quite close to the 61.8 fib level. If you want to take a short the rallies approach, I think if we break above there, then all bets are off for a shorter raise approach. But again, we need to see what price does around there to just get that out the way, clean up the chart. Oil, crude, broke below its 200-day simple moving average in the bottom of its range support at $100 a barrel. Not good. Prices rallied into that 200-day simple moving average again, the bottom of range support. We're rolling over a bit here now. The RSI wants to have another run at oversold. I think if we break below this 95 level around here, 96.125, the next major level of support is around about here at 85, 86. But 90 psychologically should hold a tiny bit and be a bit sticky. Yeah, not looking good for crude, given still a very tight physical market. That's it for today's Techie Tuesdays. I hope you've enjoyed it, and I'll see you back next week for another episode.